I've always been telling that in a place where you are having a catch-up growth, the catch-up growth is much easier compared to a saturated growth. BSE is doing a catch-up growth. In India, derivatives have been in existence for more than 2 decades. BSE had not made a beginning there till recently. 2 years before, somewhere around May 2023, we introduced trading in Sensex derivatives. And that has been a hit. The market loved the product because Sensex is the oldest index in India. And people relate to it, appreciate it, understand it, follow it. So the product became a success, and we became the fastest growing derivatives market in the world as per FIA. And we are the second largest derivatives exchange thanks to Sensex derivatives. The derivatives market in India faces a lot of headwinds because of a lot of regulatory changes. Notwithstanding that, since it's a catch-up growth, many of those headwinds have become tailwinds for BSE. That's one significant contributing factor. Second is our market share in equities have been inching up a bit. You know, cash market is not a differentiated product. To gain market share from a liquid market is difficult, notwithstanding that it is slowly inching up, thanks to the derivatives again, and also the mutual fund segment where we are in is doing wonderfully well. The changes in the regulatory front have helped BSE in 2 ways. One is, while the notional turnover came down, the quality of premium improved thanks to the regulatory interventions. And while on the earnings side the premium goes up and the revenue goes up, on the cost side, because of the way in which it is today benchmarked, the regulatory costs and the clearing stock costs have come down. So this has resulted in the quarter being a bumper year, as you said, and bumper quarter, and probably this is the best quarter in the history of BSE till now.
You spoke extensively about the derivatives market, where BSE's share, like you pointed out, has increased under your leadership. I want to understand about how you're looking at increasing regulatory oversight in that segment, and SEBI's recent announcement in terms of how settlement is supposed to happen for futures and options positions.
When a market grows in a big way, particularly the option markets grows, the regulators do feel whether it is the right type of a growth and start looking into the market for any signs of potential weaknesses or issues. The regulatory thought process was that the retail participation into the Indian derivatives market is a bit on the high side, and therefore there has to be some rationalization in terms of the derivatives market. Basically, regulators came up with a set of 6 regulatory requirements in the Indian markets, in the index derivatives market. It varied a lot from having only 1 weekly contract per exchange and ensuring the premium is paid upfront. The ELM margins, the extreme loss margins as we call it, is increased. The size of the contract is increased. There is online real-time monitoring of or intraday monitoring of position limits and taking away the calendar spread benefit towards expiry.